Welcome to the Daily Market Recap. Today is Thursday, August 6, 2026. We are kicking things off with a lively and energetic session across Wall Street. Stocks put on quite a show today as investors rode a powerful wave of bullish momentum. The primary driver behind today's positive price action? A sweet combination of encouraging economic productivity data and cooling unit labor cost pressures that gave traders fresh confidence that the elusive economic soft landing narrative remains fully alive and well. Buyers stepped up right from the opening bell, pushing major indexes comfortably into green territory as cooling inflation indicators provided green lights for risk-on sentiment. It is clear that the market appetite is back in action as institutional capital continues to deploy into both growth and cyclical names. Taking a look across the broad sectors chart, healthcare and information technology completely stole the spotlight today, flexing serious muscle with widespread gains driven by earnings updates and strong underlying demand. Communication services and industrials also caught a solid bid, keeping the rally well-rounded and broad-based. On the flip side, energy and real estate lagged behind the tape, taking a slight breather as commodity prices settled down after recent runs. Overall, market breadth looked healthy, signaling that this was genuine sector participation rather than just a handful of mega caps carrying all the weight. Meanwhile, checking in on the market temperature, the CNN Fear and Greed Index locked in at a cool 60. That officially places market sentiment squarely in the greed territory. Investors are definitely feeling frisky and optimistic about current market conditions. But we are not yet at those extreme, dangerous euphoria levels where red flags start popping up everywhere. It is a solid sweet spot for momentum traders. Leading our top news today, major hyperscale technology companies continue to double down on massive artificial intelligence capital expenditures. Updated quarterly figures across the tech landscape highlight that enterprise demand for high-performance computing power and AI infrastructure is showing no signs of slowing down. Wall Street analysts responded by revising revenue targets upward across major cloud providers, reassuring investors that these gigantic multi-billion-dollar infrastructure investments are actively translating into accelerated software growth and enterprise adoption. In economic news, the latest government reports delivered a textbook print for stock market bulls. Non-farm productivity came in notably higher than consensus expectations, while unit labor cost growth moderated. This ideal macro combination indicates that American businesses are generating greater efficiency without stoking wage inflation, giving Federal Reserve policymakers significant flexibility as they monitor future interest rate trajectories without stifling broader economic growth. Rounding out our top news, the second quarter corporate earnings parade continues to deliver pleasant upside surprises. A significant majority of reporting S&P 500 companies have successfully topped consensus EPS expectations, driven by disciplined corporate cost management and surprisingly resilient consumer spending. Furthermore, a notable percentage of management teams have raised full-year guidance, reassuring market participants that corporate balance sheets remain in great shape despite high interest rate environments. Buckle up, traders, because today's individual stock movers brought absolute fireworks on both sides of the board. Let us highlight today's massive winners. Top gainers IOVA, INSM, CITM PAC surged high today with huge buying volume. Iovance Biotherapeutics, IOV, exploded upward after releasing highly encouraging commercial adoption numbers for its cell therapy pipeline, sparking a frenzy among biotech bulls. Insmed, ENSM, caught fire as positive drug trial milestones, and bullish analyst upgrades triggered heavy institutional accumulation. SiTime Corporation, SITM, staged a massive rally following a stellar quarterly earnings beat alongside upgraded guidance fueled by booming demand for precision timing chips and AI hardware, and Paycom software PayWayC rounded out the champions list with a monster short squeeze after reporting profit margins that shattered Wall Street projections. Now, flipping over to the dark side where top losers BLLN, App, HAP, Hubs, DDOG took a painful beatdown today. BLLN plunged after issuing underwhelming forward guidance that left investors rushing for the exits. AppLove and App suffered a sharp pullback as traders aggressively locked in profits following its colossal multi-month rally. Hubs got hit hard after management flagged extended sales cycles and slower enterprise seat growth for subscription software in upcoming quarters. And Datadog, DDOG, caught heavy friendly fire in the cloud monitoring space as valuation compression and fears of increased competition in AI observability tools prompted a sector-wide profit-taking event. Let us break down the technical chart levels you need on your radar for the S&P 500 ETF ticker SPY. SPY is maintaining a strong bullish posture above its key 20-day exponential moving average. On the downside, immediate support rests firmly at $545, with a secondary line of defense sitting at $540. On the upside, bulls face initial resistance around $555, and a decisive volume breakout above $560 opens the gateway to brand new record highs. Turning our eyes to the tech-heavy NASDAQ 100 ETF, Ticker QQQ. Momentum continues to tilt in favor of the bulls. Key downside support to watch is positioned at $470, with deeper structural support around $465. On the top side, the bulls need to clear immediate resistance at $485 to reignite momentum, with 490-day hour acting as the critical psychological hurdle before the next leg up. And for small cap enthusiasts, the Russell 2000 ETF ticker IWM is testing key breakout territory. Solid downside support holds firm at $215, with secondary support down at $210. On the overhead chart, key resistance sits right at $225. If IWM can smash through $230 with heavy buying volume, small cap stocks could easily lead the next broader market rally. Moving into the crypto market, Bitcoin BTC continues to consolidate gracefully within a well-defined bullish structure. BTC is defending key support at $62,000 like a fortress, with stronger foundational support down at $60,000. To trigger the next explosive breakout, buyers must overcome tough resistance at $66,000 and clear the $68,000 mark. Ethereum ETH is following suit, showing strong stabilization above its crucial $3,100 support zone, while $3,000 serves as the primary bedrock. On the chart upside, ETH faces tough immediate resistance at $3,400, followed by a heavier supply zone at $3,000. As for the broader altcoin landscape, market rotation remains highly selective. Layer 1 protocols and AI-related crypto tokens are displaying isolated pockets of outperformance, while popular meme coins trade sideways in a tight consolidation range. Wrapping things up, overall market sentiment remains decidedly constructive, with our greed index holding firm at 60. Looking ahead to tomorrow, keep your eyes glued to incoming economic data releases and key corporate earnings reports that could set the tone heading into the weekend. If you enjoyed this daily market breakdown, please hit that like button, subscribe to the channel, and drop a comment below with your favorite stock of the day. See you tomorrow.